Hi, this is Ken. Tesla is no longer just growing, it's restructuring its entire market, and most investors are still looking at the wrong signals. In today's video, I want to walk you through what's really happening behind the latest Tesla developments. We'll break down why the Model YL launch is not just a new product, but a market expansion, how Robotaxi is quietly becoming Tesla's next major revenue engine, and why the stock dropped even though Tesla is still growing. If you're a long-term TSLA investor, this is where things start to get very interesting, because right now something feels off. Tesla is expanding, entering new segments, pushing forward with AI, and yet the stock reacts negatively. Growth is there, but the market isn't rewarding it. That's not confusion, that's transition. Tesla is entering a phase where traditional metrics alone can no longer explain what's happening. Let's start with the first major shift, the Model YL. On paper, it's simple: 3 rows, 6 seats, around 788 kilometers of range. But none of that is the real story. The real story is who this car is for. Until now, Tesla's lineup has mostly targeted individuals or small families. Model 3 and Model Y were not ideal for larger households, and that meant a huge group of potential buyers was simply excluded. Now, that changes. With the Model YL, Tesla is entering the family vehicle segment in a serious way, and this is especially important in markets like Japan, because in Japan, the dominant category isn't sedans or compact SUVs, it's minivans. Cars like the Alphard or Velfire define what a family car should be: comfort, space, practicality. Tesla was not competing there before. Now it is. So this is not just a product expansion, this is demographic expansion. People who used to say, "I want a Tesla, but it doesn't fit my lifestyle," can now say, "This is actually an option." And that shift is extremely powerful, because this is how latent demand turns into real demand, not by lowering prices, not by incentives, but by removing structural limitations. And the fact that this is happening in Japan is not random. Tesla is clearly making a strategic move here, which brings us to the second major shift, Robotaxi. Right now, Tesla is expanding its Robotaxi rollout step by step. There are projections suggesting that in the future, it could cover around 70% of the US population. Now, that doesn't mean nationwide deployment overnight, but what matters is this: city-level expansion is already happening. And more importantly, the Robotaxi era is not something in the future anymore. It has already started. From an investor perspective, the key question is no longer, will Robotaxi work? The question is, when will it show up in the numbers? Because the market is waiting for one thing: revenue. We've heard about FSD. We've seen the technology evolve. We've watched the progress. But until that translates into clear, visible revenue in earnings reports, the market remains skeptical. This is why upcoming earnings are so critical. If Tesla starts reporting meaningful revenue from Robotaxi or FSD, that could become the next major driver for the stock. Because at that point, we're no longer talking about potential, we're talking about execution. Now, let's move to the third sheaf, deliveries and the stock reaction. Tesla reported around 358,000 deliveries in Q1. That's actually growth compared to last year. So why did the stock go down? The answer is simple: expectations. The market was expecting somewhere between 360,000 to 380,000 units. Tesla came in slightly below that, and in today's market, slightly below expectations is often enough to trigger disappointment. But there's a deeper layer here. Last year's numbers were relatively weak due to the transition into the new Model Y version. So the year-over-year growth looks stronger than it actually is, and investors understand that. At the same time, inventory is increasing, production is outpacing deliveries, and competition, especially from Chinese EV manufacturers, remains intense. So in the short term, the EV business is facing pressure. But here's the key question. Why is the market being so strict? Because the market is no longer focused on today's EV sales. It's focused on what comes next. Robotaxi, FSD monetization, AI-driven revenue. If those don't show up clearly in the financials, the market hesitates, even if the core business is still growing. And this brings us to the fourth shift, Tesla's expansion in Japan. Tesla is significantly increasing its presence in Japan. Stores are expected to grow from around 35 to over 60. Service infrastructure is also expanding. Now, this may not sound as exciting as Robotaxi, but this is actually a very important move because historically, Tesla in Japan has been difficult to buy. Limited locations, limited support for many potential customers, that created hesitation. Now, that barrier is being removed. People who were interested but unsure can finally take action. And when you combine this with current conditions in Japan, the timing becomes very interesting. Gasoline prices are rising, EV adoption is still relatively low, which means there is a lot of room to grow. And if you connect this with the Model YL launch, you start to see a clear strategy. Tesla is not just entering Japan, it is positioning itself to capture a much larger segment of the market. So let's step back and look at the full picture. Model YL expands the addressable market. Robotaxi builds the future revenue engine. Deliveries show short-term pressure, and Japan expansion strengthens the foundation for growth. At first glance, this may look inconsistent. Some parts are strong, some parts look weak, but that's exactly what a transition phase looks like. Tesla is operating on multiple timelines at once. Short-term EV business, mid-term market expansion, long-term AI and autonomy. And when these overlap, the numbers don't always look clean, but that doesn't mean the strategy isn't working. So as investors, I think the key is this. Don't focus only on whether the current numbers are good or bad. Focus on what is actually being built. Because if you judge Tesla only by today's metrics, you might completely miss where the company is going. Right now, Tesla is entering one of its most important phases, not a simple growth phase, but a transformation phase. And how you interpret this moment will likely shape your perspective on Tesla for years to come. As for the stock, Tesla closed this week around $360, holding that level for now. But the real story is not the price today. It's what starts showing up in the next few quarters. If you found this analysis helpful, make sure to subscribe. I share daily insights so you can stay ahead of what's really happening with Tesla. Thanks for watching, and let's continue to enjoy life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.